Good morning, my dear students. Good morning, one and all. Welcome to the first session of the course. The topic name is Foundations of Real Estate Investing. We need to talk in this specific module. So, unlocking the foundations of real estate investing, understanding a market dynamics. In the realm of investment opportunities, we can say real estate that stands as a timeless pillar. It's offering a spectrum of possibilities for wealth creation and financial security. Yet beneath the allure of a property ownership, it lies a complex ecosystem that's governed by a market dynamics that can shape the outcome of investments, my dear students. So to navigate this terrain successfully, it's very crucial to grasp the foundation of principles that underpin the real estate investing, that's starting with a deep understanding of a market dynamics. Okay, the first concept we need to talk about what are real estate market dynamics. Real estate market dynamics that encapsulate the ever-changing forces that influence the property values, demand, and the supply chain within a given area. These dynamics are shaped by a multitude of factors that's ranging from economic indicators to socio-political trends, and all of which contribute to the fluctuations and trends observed in the real estate market. According to the supply and demand, the fundamental drivers we have to concentrate. At the core of real estate market dynamics, it lies the interplay that's between a supply and a demand basis. When demand exceeds a supply, property values tend to rise. It's creating opportunities for investors to capitalize on appreciation. Conversely, we have to focus when supply outstrips demand, prices may stagnate or decline. It's presenting challenges for investors. They're seeking a profitable ventures. So understanding the nuances of supply and demand, it involves delving into various subsectors and factors, including like population growth, economic development, and regulatory policies. For instance, areas that experiencing rapid population influxes often witness heightened demand for housing, driving prices upwards. Conversely, regions with stringent zoning regulations may face supply constraints. It's leading to scarcity and inflated property values. Understand? So what are the economic indicators that's unveiling a market trends we need to concentrate? Economic indicators, it serves as barometers for assessing the health of real estate markets. It's providing a valuable insights into the future trends and investment opportunities. Because some of the key indicators such as like GDP growth, unemployment rates, and interest rates that exert significant influence on a property markets that's shaping both investor sentiment and the consumer behavior. Understand? So the next concept, before socio-political factors, that's navigating a regulatory landscape. So as I told on a before level, that's economic indicators. For instance, periods of robust economic expansion typically correlate with increased demand for real estate. As individuals and businesses, they seek to capitalize on a growth opportunities here. Conversely, economic downturns, it may trigger declines in the property values as consumer confidence wanes and investment activity diminishes. So according to the socio-political factors that's navigating a regulatory landscapes, beyond economic fundamentals, we can say socio-political factors, it play a pivotal role in shaping the real estate market dynamics. Government policies, tax regulations, and urban planning initiatives, that all the process can all influence the attractiveness of a property investments within a given jurisdiction. For example, favorable tax incentives for real estate development may spur investment activity. It's driving a demand and boosting property values. Conversely, regularity hurdles or political instability, that process can deter investors. It's leading to market stagnation or declines in the property prices. So in a nutshell, we can say it's look like navigating the complexity of real estate investing. In essence, we need to focus. Understanding a real estate market dynamics is very essential for navigating the complexities of a property investments carefully. By discerning the interplay between a supply and demand, interpreting economic indicators, and staying attuned to socio-political trends, investors they can identify the lucrative opportunities and mitigate risk effectively. While mastering these foundational principles, it requires a diligence and ongoing analysis. The reward of real estate investing that can be substantial for those who approach it with insights and acumen. By honing the understanding of a market dynamics, investors they can unlock the full potential for long-term wealth creation and financial prosperity in the dynamic world of real estate. Understand? The next part we need to talk about the unveiling the foundation that's analyzing market trends and opportunities in a real estate investing. Real estate investing it stands as one of the most dynamic and potentially lucrative avenues of wealth creation we can say now. At its core, it lies a blend of art and science for understanding the market trends and seizing opportunities that play pivotal roles here. In this exploration of the foundational aspects of real estate investing, we delve into the art of analyzing market trends and uncovering opportunities that define a success in this field. Understand? The first point we need to discuss about understanding the market landscape. To navigate the intricate realm of real estate investing, one must first grasp the underlying current of market landscape. Market trends it encompasses a myriad of factors, including supply and demand dynamics, economic indicators, population shifts, and regulatory influences. By dissecting these elements, investors they can gain invaluable insights into the trajectory of real estate markets. It's enabling informed decision making too. Second point, that's data driven decision making. So according to the process, in the digital age, access to data has revolutionized the way investors approach real estate. Like analytical tools and platforms, it offer a wealth of information from historical sales data to demographic trends. It's empowering investors to make data driven decisions very quickly. By leveraging this data, investors they can identify the emerging trends and forecast the market movements and pinpoint areas it ripe for investment level. The third point is identifying opportunities. So within every market trend, it lies a multitude of opportunities. It's waiting to be unearthed. Whether it's a burgeoning neighborhood on the brink of gentrification or a commercial corridor that poised for revitalization, that astute investors process the acumen to identify these hidden gems. So this keen eye for opportunities often sets a successful investors apart, and it's allowing them to capitalize on undervalued assets and unlock their full potential here. The fourth point, it's adapting to change. Real estate markets are inherently dynamic, that subject to fluctuations. It's driven by macroeconomic shifts, technological developments, and societal changes too. Successful investors they embrace change as a catalyst for innovation, constantly adapting their strategies to capitalize on evolving market trends, whether it's embracing emerging technologies like blockchain or pivoting towards the sustainable development practices. And agility is a very important process and paramount in the world of real estate investing, we can say here. So what are the final points? That's a mitigating risk. While opportunities abound, real estate investing also carries inherent risk. From market volatility to regulatory changes, investors must employ strategies to mitigate potential risk and safeguard their investments. So diversification, thorough due diligence, and prudent risk management practices, that all the process it serve as pillars of resilience in the face of uncertainty. It's ensuring a long-term success in real estate portfolios. So in a final conclusion, we can focus on the specific slide. Analyzing market trends and uncovering opportunities, it lies at the heart of real estate investing. By understanding the intricacies of a market dynamics, leveraging data-driven insights, and embracing change, investors they can position themselves for success in the ever-evolving landscape. So with a discerning eye for opportunity and a strategic approach to risk management, the foundation is set for realizing the full potential of real estate investments, we can say now. So another and final point, we need to talk about the important concept that's of crafting your unique path. Developing a personalized investment strategy in real estate, we need to talk some other points, then we'll go for a conclusion in the specific introduction level. Real estate investing is not just about buying a properties. It's about creating a wealth and securing your financial future through strategic decision making. And one of the foundational pillars of real estate success is developing a personalized investment strategy that's tailored to your goals, aims, risk tolerance, and resources. As part of the slide, we will explore the importance of crafting a personalized investment strategy, and we need to provide actionable tips to help you embark on your journey towards real estate prosperity. The first point, that's understanding your objectives. So before diving into the world of real estate investing, it's very crucial to define your objectives very clearly. Are you looking for a long-term wealth accumulation and a short-term cash flow, or a balance of both? Okay. And another question I need to ask, that's, are you interested in residential properties commercial real estate, or perhaps a mix of both? So actually understanding your objectives that will guide your investment decisions and shape your strategy accordingly. Second level, that's assessing a risk tolerance. Every investor has a different risk tolerance that's level based on a factor such as like a age, financial situation, and personal preferences. It's look like a demographic profile, I can say. Some investors may be comfortable with a higher risk and higher award ventures, and while others prefer a more conservative approaches. We have to focus and the assessing your risk tolerance is essential for crafting a strategy that aligns with your comfort level and helps you avoid undue stress or anxiety during a market fluctuations. Okay, so what of the third point, that's analyzing a market conditions. And actually real estate markets are dynamic and subject to various factors such as like economic conditions, demographics, and local regulations. Analyzing market conditions is a very critical for identifying opportunities and mitigating risk. So researching trends, studying historical data, and staying informed about the local market dynamics that will empower you to make informed investment decisions and adapt your strategy as needed. So another point, that's a diversification and a portfolio allocation. Diversification is a fundamental principle of investment management, and real estate is no exception now. So building a diversified portfolio, that process can help spread risk and enhance the long-term returns. So just to consider allocating your investment capital across different property types, property locations, and the investment strategies to create a robust and resilient portfolio is very important. And whether it's residential rentals or commercial properties or real estate investment trust, that's REITs. So diversification can help you weather market fluctuations and optimize your risk return profile. Okay, that's the next point, like utilizing a leverage wisely. Leverage, or the use of borrowed capital to increase the potential return of an investment. It can be a powerful tool in real estate investing. However, it's a very essential to use the leverage wisely and avoid overextending yourself, and evaluate your financing options very carefully, my dear students, and just to consider factors such as like interest rates and loan terms, and ensure that you have a solid plan for debt service and risk management process too. While leverage can amplify returns in a rising market, we can say it can also magnify losses in a downturn. So prudence is a very important key here. So final point, that's monitoring and adaptation. The real estate market is constantly evolving exactly, and successful investors are those who can adapt to changing conditions, regularly monitor your portfolio performance, track your market trends, and reassess your investment strategy as needed, and be prepared to pivot if circumstances dictate, whether it's adjusting your allocation, exploring new opportunities, or exiting underperforming investments too. So flexibility and agility, that are essential traits for real estate investors that's navigating a dynamic markets now. So in a conclusion, we can say developing a personalized investment strategy is the cornerstone of success in real estate investing. By understanding your objectives, assessing your risk tolerance, analyzing your market conditions, diversifying your portfolio, utilizing leverage wisely, and remaining vigilant in monitoring and adaptation, you can build a robust and resilient investment strategy that's tailored to your unique goals and circumstances. So remember that real estate investing is a journey, not a destination. So just to stay focused, stay informed, and enjoy the ride, my dear students. Okay, my dear students, I hope you have enjoyed the introduction part of the topic, that's foundations of real estate investing we have discussed in this specific introduction lecture. Thank you once again, and thank you all, my dear students.